Hello, ladies and gentlemen. Good morning to you all, and excited to be here with you guys this morning. So, before we kickstart the live session, let's quickly confirm that we're on the same page here. So, what I would love you to do right now is to type in hi in the comment section if you can see my screen and you can hear my voice clearly. So I will need you to give me some feedbacks in the comment section. So let's see what is happening here. So I'm saying if you can see my screen and you can hear my voice clearly, type in hi in the comment section to give me some positive feedback so that we can kickstart the session. So what do we have right here in the comment section? Okay, I see 835. Good morning, thank you. Red Cat, what a name. Good morning to you. 3500, good morning. Okay, hi, thank you for that confirmation. Okay, Dino always says thanks. All right. Okay, I see Genry, good morning, thank you. Hey Carrie, good morning to you, glad to have you around this morning. JL says good morning. Okay, thank you for that. All right. So I will be taking this as a positive confirmation that we are good to go this morning. I'm excited to welcome you to another promising session on the Extreme Speed. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial markets using technical parameters to identify trading opportunities lining up for us today. Well, for those who are joining us for the first time, you're welcome on board, and I'm so glad that you are here with us. And one thing I would like you to know is that we always do this on a daily basis. So, what we simply do here is to gather as a community in anticipation of the New York session, review all the pairs we have been monitoring since the beginning of the week, identify technical structures so that we can position ourselves in such a way that we can catch any opportunity that the market presents to us during the New York session. Well, it always looks as if it's complicated at first, but my advice is that you stay tuned in, be with us throughout the session, and try to continue to join us on a daily basis. And I assure you, with time, you will get to understand how this works, and after a while, you will be able to make independent decisions using the information that we will be sharing during the session. So once again, you're welcome on board. Try to stay tuned in so that you can be part of what is going on here. So with that being said, let's dive into the market to decipher what is really going on at this point in time. Well, as usual, the first thing we want to be doing here is to look at the fundamentals. But for today, we really don't have any macroeconomic event affecting the pairs that we have been monitoring. However, it's important that we look at what has happened yesterday. Remember, we were looking forward to a macroeconomic event yesterday, and that was the ISM manufacturing PMI. And I was able to spool out some summary, which I would like to share with you guys so that you can also have a better perspective into what our expectations should be like for the US dollar, since it's the major currency which shares the same denomination with other pairs that we have been monitoring since the beginning of the week. So the fundamental highlights I have here for the ISM manufacturing PMI normally the ISM manufacturing PMI always indicates the business condition in the US manufacturing sector. And what we had yesterday was a hedge up to about 47.7 for the month of February. But this was actually below expectation, as we had economics forecast the index would increase to 4.80. So we had a negative variance of 0.57, which is below expectation as said. Though it's a small rise, if we compare the data we have had in the last 6 months, it's a little bit higher than what we have been witnessing in the last 6 months. So with the PMI reading below 50, like I said yesterday, indicates that a contraction in the manufacturing sector, which is not really that good for the US economy. And as a result of this reading coming below standard is generally going to be seen as a negative or bearish signal. Though there were signs that factory activities were starting to stabilize, with a measure of new orders pulling back from a more than 2.5-year low, yesterday the Institute for Supply Management survey also showed prices for raw materials increasing last month. So this is some level of positivity in the year for the US economy. So it appears that the first quarter of the year is gradually picking up on a positive note. So which the ISM partly attributed to a return to more balanced supply-buyer relationship, as sellers are more interested in finding orders and buyers now see the need to reorder. So with this situation we have here, it's likely that the dollar will begin to rise, as this might give some level of hopes. And following the macroeconomic event yesterday, we actually saw a little rise in the dollar a little bit before giving up some of the profit close to the Asian session yesterday. So we shall be looking at how the market has reacted to the PMI and what we want to be expecting during the New York session today. So I'll be advising you take your cup of water and sit back and relax as we dive into the current market structure. So the first thing we are going to be looking at today is the US oil, as usual, of course. And what we have on the US oil is a situation here that has been looking a little bit choppy since the beginning of the week, but I think we were able to make some positive movement in the last 24 hours. So let's quickly run through how the week has started on the US oil for us. So we had a situation here at the beginning of the week where we identified a flat channel which was happening between the $76.68 level, which was initially our resistance point for the week, and then we had the support level sitting at the $75.80 area. And you all know what we look out for whenever we have this kind of flat channel. We all need to be patient, wait out for breakout or breakdown of the channel for trading opportunities. So what happened here at the beginning of the week was a breakdown of that channel, which gave us some selling opportunities as we took some couple of sell position, which actually triggered below the $75.80 level, and price action moved about 80 pips in our direction before we got snapped out of those sell position. At worst case scenario, break even in those instances. Now we had a situation here that price has been consolidating right above the trend line, and if you recall vividly, at the beginning of the week we identified the bearish momentum which has lasted over 2 weeks in this market, and at the beginning of the week we saw how price action broke out of that trend line. And you all know what we expect whenever we cite a breakout of structure. We expect at one point in time price is likely going to come back, do a retest of that structure, and in fact we had something that looks more like a reversal pattern in the form of a double bottom structure. And since we had that situation there with the neckline of the reversal pattern forming right exactly at the $75.80 level, which we initially identified as a support level for this week, we saw the breakout retest of that structure, and it was at this point we had our first buy position triggered at the beginning of this week. And since then price action had continued to find higher highs here. We had another opportunity to add more position at the breakout of the $76.68 level. We had a couple of buy pressure around that area which gave us some positions there. And if we look at what we have had here since the beginning of the week, we had the first position with about 200 pips in profit before the selling momentum began. The second position also moved about 100 pips as well before that bearish momentum came in. Now, during the live session yesterday, we had an opportunity to sell after the appearance of continued selling pressure below the $77.85 level and the $77.40 area, which led into that breakdown of that bullish trend line, which was the first breakdown of that bullish trend line since the beginning of this week. And with that situation we had here, we sold the breakdown of that structure to the downside. We had another position at the breakdown of the $76.68 level, and during the live session yesterday I told you that we could also be thinking of adding more selling opportunity if price action comes back to do a retest of structure. And in fact, when we scale down to the lower time frame, we had a position, we had a structure at the $76.45 level, which was triggered, I think, before the end of the live session yesterday. We had that position triggered and price action drop to the downside. Now, it didn't move that far anyways, as it moved about, let's see, how many pips was that? For those who joined from this level, it moved about 30 pips in our direction before we started seeing the bullish momentum that came in this market, taking us out of all the sell positions that we had yesterday. Now, price coming back to do a retest of that bullish trend line incited another wave of selling momentum, which I wasn't part of anyways. As we saw price drop to the downside again, we saw bullish momentum resume above the $76.68 level, bringing price back into that sell zone that we identified at a couple of days ago. So price action consolidating within the $77.85 level and the $77.40 area emphasized the strength of the sellers at that particular point in time. And as you can see, we saw that every attempt by the buyers to break out of the $77.85 level was negated by the buyers in this, sellers in this market. So at this point, I think I told you yesterday that the only time we are going to be thinking of buying the US oil is we want to see price action take out all the sell position within this range in order to give us a confirmation that price action, that the momentum has actually shifted. And fortunately for us, a couple of hours ago, we finally saw the breakout of the resistance level, which has been resisting bullish attempts in the last 72 hours. So we saw price action break out of that structure to give us a buy opportunity. And you know, we had the buy stop order sitting above that level, and in fact we were lucky enough to have our position triggered at this point. And for those who are taking advantage of this opportunity, kudos to you guys for being on standby to catch that move, as you will currently be running with about 40 pips in profit. So at this point in time, we don't want to lose out on what we have gained so far. So the next thing we are going to be doing right now is to secure our current position by moving our stop loss accordingly. And one thing I'll be advising us to do here is to move our stop loss to our entry points. Anywhere around our entry point will seems quite okay here as we continue to monitor price action. And one thing I would like to state here is that you all know that from a technical standpoint, whenever we have a significant breakout of a structure like this, we expect that one point in time price is likely going to come back into that structure to incite another wave of bullish momentum at this point. Now, the question is, when will this retracement phase happen, or will this retracement ever happen in this current market? And for those who had missed out on this opportunity, we are going to be looking into how we could take advantage or add more position to our existing trade right now. So for those who are being in the buy position right now, kudos to you, congratulations to you guys. Move your stop loss accordingly, secure this current position, and let's take a dive into the daily time frame. Let's see things from an holistic point of view. Then we shall be coming back down into the 1 hour time frame to make a decision for today. So with that being said, let's dive into the daily time frame. So now on the daily time frame, what was the structure we identified here on the daily time frame? Now, when we look at the nature of things here on the daily time frame, it is quite obvious that price action has been bearish in the last 8 to 9 months. And in fact, throughout the second half of last year, we saw our price has consistently found lower highs, and as a result of this, we were able to connect the series of lower highs here, which has given us that bearish trend line. And if we zoom into what has been happening here in the last quarter, of last year, you would realize that price action fell into a long consolidation phase, which appears to be going into the 4th month now. Price action trapped within the $82 level, which has been serving as the resistance point, as every attempt by the buyers to break out of the structure has been negated at the $82 level. Now we have a demand zone at the $70 area, which was the lowest point price has ever been in the last 1 year. But one interesting thing about the consolidation phase here is the fact that we can see that buyers are trying as much as possible to break out of the structure. And what did we see to make us have that perspective? Well, if we look at the demand zone closely here, you will see that we have a low here, we have higher lows here, and when we connect the series of higher low, what do we find? We have a beautiful bullish trend line in that regard. So what this simply means is that we have bullish attempt coming in from this market. Probably the demand for the US oil is gradually increasing despite being caught within this channel. Now, as we head into the new week, we identified the $76 level, which has been a major determinant of price action here in the last 5 months. We said this level will be our yardstick for trading activity for this week. And remember what I told you about the $76 level at the beginning of the week? I said if price action trades below the $76 area, we shall be looking out for selling opportunities. And if it so happens that price action breaks out of the $76 level to the upside, we shall be looking out for buying opportunity. And what you see here on the daily time frame is that price action has been bullish at least for this week, and we were lucky enough to be part of this bullish momentum as price action finally breaks out of the $76 level, did a couple of retests of structure on our lower time frame to incite this bullish momentum at this point. And currently we are at a point where price action is currently oscillating right around the $78 level. And if we look into the past as well, we can see that the $78 level had some bullish memory here. We have some buying power around that area at one point in time. Look at the $78 level. So what we are going to be doing right now is to scale down to the 1 hour time frame. Now let us see how price action is reacting to that $78 level to decide what our next line of action will be. Now, what we are going to be looking out for on the $78 level? Well, the first thing we are going to be looking forward to is, considering the long-term selling pressure in this market, we want to see if that $78 level will be rejected by the sellers. So if we start seeing selling pressure around the $78 level, we might likely see a situation where price will drop back into the $76 level, probably in anticipation of another wave of bullish momentum or a breakdown of the $76 level. However, if we start seeing trend continuation pattern around the $78 level, then we would have no choice than to be thinking of adding more position to our existing trade. So with the information we have here on the daily time frame, let's scale down to our lower time frame to see what is really going on around the $78 level and see how participants in this market has been reacting to that structure. So when we scale down to the 1 hour time frame, what do we see here? So the first thing I'll be doing right now is to identify that $78 area, as this is likely going to be one of the major structures we shall be using to guide trading activities for today. So I will be identifying the $78 area, and I think that falls around here. Okay, so we have it around here. So well, it's quite close to the resistance point where we have been witnessing selling pressure since the beginning of the week. So I will just round it up as a $77.85 level, which has been broken to the upside here. So we might want to leave it. Let's leave it there so that we can see the $78 area. So I will just label that and give it the smallest size here to just let it over behind the scenes so we can just see it as we continue to monitor price action. So we have a situation here where price action has broken out of the structure. That is a beautiful signal, as we have a situation where the selling positions here has been taken out. So there are two things we want to be looking out for going into the New York session today. And for those who had missed out on this opportunity, let's see how the market will be presenting us with another chance. Now, the first thing we are going to be looking forward to, since we already have a breakout of the $77.85 level, and taking into consideration the technical idea that after a breakout of a structure, there is a likelihood that price action will be dropping to the downside. So right now we can be saying we might likely see price action do a retracement back into the structure that was broken during the last couple of hours, after which buying pressure above this level will be giving us an opportunity to join that rally to the upside. So that is one scenario we are going to be looking out for to buy the US oil. Now, another thing that could happen here is following the impulsive move to the upside here, as soon as price got into the $78.31 level, we saw sharp rejection of that area. So we could have a situation where price action transitions into a trend continuation pattern. It could be a bullish rectangular pattern here, a breakout retest on our lower time frame, trigger another opportunity to join that rally to the upside. So in order to capture this trend continuation pattern, and since we already have some sharp rejection here in the last 1 hour, we want to be identifying that level so that we can use that to guide trading activity for today. So I will be identifying that by connecting that spot. So we have $78.30 level there, right? Okay, $78.30 level. So that is figured out at that point. And let's label it for the sake of clarity, $78.30 level. So we want to see how price action will be reacting to that structure going into the New York session today. So there are two things I said we are looking forward to. One is price is likely going to come back to a retest of structure. So if we see price drop into the downside, we need not be scared or worried about that, as this might likely be a retracement. It might even drop as far as below the $77.85 level before buying pressure resumes on our lower time frame to signal that trend continuation to the upside. Now, the other scenario I'm looking forward to here is to look for trend continuation pattern around here. Price action could evolve into a flag pattern, a bullish rectangular pattern, a falling wedge, whichever case it may be. Breakout retest of structure on our lower time frame will definitely be welcoming additional positions here. So for those who had missed out on this opportunity at the breakout of the $77.85 level, well, I will be advising you to hold on. You could have your buy stop order right above the structure to trigger a buy position if price action breaks out of the $78.30. So these are my views here for buying opportunity on the US oil. However, we should also always take into consideration the other perspective as well. That is, if price does not climb to the upside but instead continues to drop to the downside, are we going to leave that one? No, of course, no. So we want to position ourselves in such a way that even if selling momentum resumes in this market, we want to be part of that move. Now, what we are going to be looking out for to sell the US oil is to see price action drop below the $77.85 level. And even if price action drops below that structure, we are not jumping in right away, as we still need some further confirmations to ensure that the selling pressure has come to stay. So we might likely see something like price action doing a retest of the $77.85 level, probably continued and multiple rejection of this level to give us a signal that buyers are finding it very difficult to break back above the $77.85 level. Then we could actually join that decline to the downside. And if you are a cautious trader, you might want to see price break down the $77.40 level before joining that decline to the downside. So below the $77.85 level with multiple and strong selling pressure on our lower time frame will be a beautiful area to look out for selling opportunities. But I doubt if that is going to happen, considering this strong engulfing candle that has broken out of that strong resistant level. I'm of the opinion that price has a high chance of climbing to the high side. But if the contrary happens, then definitely we want to be on standby to catch that opportunity. So these are my views here on the US oil for today. So I hope that you've munched my screen so that you can use it as a reference point when you are about to make your individual decision. Now I can see some comments in the comment section. Please kindly disregard all comments from this. Anyone introducing you to a platform, investment platform whatsoever, please stay off those links. They are very malicious, and extreme speed is not guaranteeing you any protection, because you could get yourself exposed to illicit activities. All right, so please disregard all these malicious and spamming message in the comment section. Okay, with that being said, here, if you do have any questions, feel free to drop your inquiries in the comment section before I move on to the next pair. Okay, do we have any comment? Okay, Mayora, good morning, glad to have you around. Right, so in the absence of no questions, I want to be assuming that we're on the same page here. So I will be moving on to the next option, which is the US tech. On the US tech yesterday, we was topped out of our buy position yesterday. Remember, we had the buy position above the $12,070 level, and I told you that if we do have a breakout of the 12,100, which also shares a confluence with that bearish trend line, that we want to be joining a rally to the upside. And in fact, before the end of the live session yesterday, we had that position triggered, but unfortunately we were taken out of that position in a loss. But it's okay, we were able to catch some more opportunities during this market. So let's quickly run through what has been going on in this market since the beginning of this week. Well, at the beginning of the week, we initially identified a channel here between the 12,020 and the 11,960 area, which where the 12,020 was serving as our resistance level for the week. Let me extend that out a little bit so that we can see things more clearly here. So that was the $12,020 level, which I said was the resistance point at the beginning of the week, and then we had the 11,960 level, which was serving as the support level for the week. So we had the breakout of the 12,020 at one point, and which triggered a buy position for us, as you can see here. And at each occasions we had a buy position above that structure. We were able to catch about 130 pips on both occasions before selling momentum came in to take us out of that position. And during the live session yesterday, I told you how we want to be buying above the structure, which I told you I already triggered a position above the 12,070, but unfortunately we were taken out of that position as price action continued to drop to the downside. And remember that we had a support level for the week at 11,960, and a couple of days ago I told you that if price action breaks down that structure, we definitely want to be looking out for selling opportunities. And what happened here during the later part of the New York session yesterday was quite interesting, as we saw the breakdown of the 11,960. Price action did a retest of structure. In fact, it gave us multiple opportunities to join that decline to the downside, and since then price has been dropping further to the downside. And if you are taking advantage of that move right there, well done to you for being on standby to catch that one, as you would currently be running with about 110 pips in profit. Then this morning I also had this position here after identifying the 11,900 structure. As you can see here, this level was a strong buying zone at one point during the later part of last week's trading session, and we saw the breakdown retest of the structure during the early hours of today to trigger another position in this market. So right now we are at a situation where price is currently trading at around the 11,850 level, with some level of buying pressure around the structure. So now that we are going into the New York session today, what is going to be our plans? How do we intend to take advantage of any trading opportunity in the US tech? Well, the first thing I'll be advising us to do based on this current structure that we have here, is to scale up into the daily time frame. First of all, let's look at what is really happening from an holistic point of view, after which we shall be coming back down to make a decision for today. Now, if we scale up into the daily time frame, this is what we were able to see here on the daily time frame. Now, look at the structure we have here, and you will first of all see that price action has been bearish since the beginning of last year. And to further emphasize the bearish momentum in this market, we were able to connect a series of lower highs here, which has given us this resultant bearish trend line. And things got a little bit interesting during the second half of last year, as we saw how the $11,000 area negated all attempt by the sellers to continue to trade to the downside. And as you can see, at every single time price action drops into the $11,000 area, majority in the market deemed it fit to buy the US tech, as they felt the $11,000 level seems cheap enough to buy this commodity. As you can see, the same thing happened here. And at the beginning of this year, if I zoom into what has been happening here, since the beginning of this year, we saw our price has been finding higher highs after breaking out of that $11,000 area. And we were lucky enough in this community to be part of this move, as we rode the move all the way up. And this led to a final breakout of that trend line, which gave us a signal that the bearish trend line is no longer strong enough to hold that bearish momentum. Price action climbed up, broke out structures like the $12,000 level, $12,300 level, and culminated at the $12,900 area. And what we saw here, as soon as price got into the $12,900, was selling pressure resuming that area, breaking down the $12,030. Remember, we identified a reversal pattern at the beginning of last week's trading session, which came in the form of a double top structure. So with the neckline sitting at the $12,030 area, we saw the breakdown of that structure, which also shares a confluence with that bullish trend line that has been supporting that bullish momentum since the beginning of this year. So after the breakdown of the 12,300, price action appeared to continue to go to the downside. And so at the beginning of this week, we saw our price continue to trade around the $12,000 area, which is also a strong psychological level, and it has also been a major determinant of price action in the past. If we go to as far back as the month of November, you will see how the $12,000 area has been a strong selling niche. And not until the first day of the month of February that we witnessed the breakout retest of that level to the upside. And right now we can see that price is currently trading below the 12,900 level, which is a strong selling niche in this market. So like I said earlier, look at below the $12,000 area here in the month of November. You can see that this area is so strong that sellers continue to negate all bullish attempt from that structure. And with the situation we have here in the last couple of days now, we have price action breaking down that $12,000 area, coming within that selling zone, and definitely we want to be looking out for selling opportunities as long as price remain below the $12,000 area. And so with this information we have here, I would like to extend the 11,700 level so that we can consider the 11,700 level as we continue to monitor price action. So we might likely see price drop to as far as breaking down the 11,700 to retest the bearish trend line that was broken at the beginning of last month's trading session. And you all know that from a technical standpoint, whenever we have a breakout of structure, we expect that one point in time price is likely going to come back to do a retest of that structure in anticipation of another wave of bullish momentum. Another thing about that, talking about retracement in anticipation of a bullish momentum, is the 11,700 level, which was also broken as well. So we need to be very careful as soon as price gets into the 11,700, as we want to see how price action will be reacting to that structure to determine if we will continue to add more position to our current sell position, or we might likely be getting ready for a bullish momentum. So if price action drops into the 11,700 and we start seeing multiple rejection on our lower time frame, probably price action evolves into a reversal pattern like your double bottom structure, then we should be getting ready for a bullish momentum. However, if price action breaks down the 11,700 with selling pressure below the structure, then we would have no choice than to join or add more position to our existing sell position at this point. So right now we are at this level here where price is currently trading around the 11,850. So we want to see how price action is reacting to that structure to determine how next we want to be going. So in that regard, we shall be scaling down to the 1 hour time frame. So let's go back to the 1 hour time frame, then look at the 11,850 level, then decide what our next line of action will be. So right now we are back at the 1 hour time frame. So I would like to do some deleting right now, as okay, I'll delete this and delete this one too as well, as I need us to have a clean chart so that we can see things more clearly here. All right, so we are at an area here around 11,850 where we have been witnessing buy pressure in the last 4 to 5 hours. Now we have been witnessing buy pressure around that area. So I will be bringing out my line chart, but I think the line chart does not fit into that view here, as you can see. So let me zoom out and let's see if we can have it. Okay, we have a structure here at the 11,830. So let's identify that structure. So we have 11,830 level, which we shall definitely be using as a yardstick for trading activity for today. So the first thing I'll be doing right now is to label that structure so that we can have a visual understanding of what we are talking about here. So we have the 11,830. I will zoom out. All right, so here we are right now. Remember, we are in the sell position. We joined right below the 11,960, added more position at 11,900, and we have moved our stop loss accordingly somewhere right around 11,900 to secure this current sell position. So with the multiple rejection of the 11,830, it's a beautiful sign that there is some level of buying pressure around that area. So that is why we have secured the current position, just to protect ourselves against any sudden pullback that might happen here. So now that we are going into the New York session today, we are going to be using the 11,830 level as a yardstick for more selling opportunities in this market. So how do we intend to use this? Well, what I'll be looking forward to is another breakdown retest of the 11,830 to add more position to my existing trade. Now, what we are going to be looking forward to, considering the fact that this is a strong demand zone, like I said, when we zoomed into the past, we saw here during the first day of the month of February, we saw bullish momentum resume from that structure. So we might likely see the same thing happen here. So what I want us to be doing is to look for a breakdown of the 11,830. First of all, we are not jumping right in, as it could turn out to be a false breakdown. So we want to look at a breakdown first of all happen, then we scale down to our lower time frame, where we shall be looking out for a retest of structure, further confirming that sellers have come to stay in this market. Then we could actually join or add more position to our existing trade at that point. So anywhere below the 11,830, retest of structure should be welcoming additional position. However, if the buy pressure here continues, that is, the bullish momentum here continues in such a way that price continue to find higher highs from the structure, well, we might be seeing this as a reversal pattern where price will be retracing back into the trend line that has been respected since the beginning of this week. So if I zoom out a little bit and let us see how the trend line has been faring for us in this market, you will see that it has at one point in time been respected by sellers in this market, though we had some couple of breakouts of that structure, but price action came back below these levels to further emphasize the strength of that bearish trend line. So if it so happens that the bullish momentum continues above the 11,830, then we might want to wait at a bust stop at between the 11,900 here and the 11,960 to look out for selling opportunities. And what we want to be seeing whenever price gets into the structures has selling pressures around that area, which always comes in form of a reversal pattern. So we might likely see a double top structure below the 11,900 to trigger a sell position, or it could be within the between the 11,900 and the 11,960. Most importantly, we want to be looking out for selling pressure supporting that trend continuation to the downside. So we are looking forward to selling opportunity on the US tech for today as long as price remain below that bearish trend line. However, if it so happens that price action breaks out of the trend line here, well, we might be seeing this as a signal that the trend line is not strong enough to hold bullish momentum. So we shall be waiting for a retest of structure to further confirm that we are good to go on the bullish momentum. So let's be on standby to catch either of these opportunities as we continue to monitor price action from this area. But for me at this point, I'm tending towards a bearish momentum here, considering the fact that price has broken down this lowest point it has been this week, which is the 11,960, and in fact it even broke down the 11,900 level, which was another support level during the last week Friday's trading session. So I'm of the opinion that we might be seeing some selling momentum coming in this market. So even if buy pressure resumes here, I will be seeing this as a retracement of that impulse leg, where we shall be looking out for another opportunity at anywhere between the 11,900 and 11,960 to join that decline to the downside. So that is that on the US tech for today. If you do have any questions, feel free to drop your inquiries in the comment section. I can see you, my Gigi. Good morning to you. Trust you are doing well today. All right, so in the absence of no questions, let's move on to the next pair. And the next pair we are looking at this morning is the USDJPY. Now, on the USDJPY, we have an interesting situation here. Remember, price has been consolidating since the beginning of the week, where we had a flat channel identified between the 136.550 level, which was initially the resistance point for the week, and then we had the support level of the channel sitting at the 136.00 level. So we had some buying opportunity at the beginning of the week here. I think on Tuesday we joined some bullish momentum, which gave us about 60-70 pips thereabout on the first position, and at the breakout of the resistance level we had about 35 pips before the sell momentum resumed. And I told you during our live session on Tuesday that I wouldn't be selling the USDJPY unless we have a breakdown of the 136.500 level, which also shares a confluence with that resistant level of the ascending channel we identified on the 4 hours time frame. Now, price action dropped below the 136.550 to trigger a sell position for us on Tuesday, and we rode the move all the way down into the 135.300 level, where we saw another wave of bullish momentum resume, and that gave us over 120 pips before the bearish momentum started. Now, during the live session yesterday, we were looking out for continued selling pressure, and as a result of that expectation, we identify simple structures that will be guiding our trading activity. And one of the structures is this important bearish trend line that you have here. So I told you that we are going to be using this bearish trend line to guide our trading activity. And what I simply said is that if price action continues to trade below the bearish trend line, we continue to look out for selling opportunities, and if price action breaks out of the trend line, we look out for buying opportunity. And in order for us to be able to catch a buy opportunity in this market, we identified this 136.150 level, which also shares a confluence with that bearish trend line, where I said a breakout retest of that structure will definitely negate all bearish attempts in this market, and we shall be looking forward to buying opportunity. And this was exactly what happened here. Price action broke out of the trend line, broke above the 136.150 triggered our buy position, and since then price action has been finding higher highs. And if you are part of this position right now, well done to you, as you would currently be running with about 50 pips in profit. Then I also stated here yesterday that a further breakout of the 136.550 will also be triggering another additional position to our existing trade. And in fact, we saw that happen during the early hours of today as price action moved about, let's see how many pips, about 30-40 pips thereabout before the selling momentum came into the market to take us out of that position. And I hope you already have your buy position triggered right now as price action resume back above the 136.550 level. Now, before we go into the expectation for today, there is something I would like us to see here, and we shall be using this also we shall be having this at the back of our mind as we monitor price action around the structure. Now, and that is the 136.900 level. Now, look at that structure here. Since the beginning of the week, we have been witnessing selling pressure from the 136.900 level since the beginning of this week. The same thing also happened here during the early hours of today, as we saw that price was unable to even get close to that 136.900 level to give us a higher low. Price was unable to break the previous structure, and with this kind of situation here, it's very obvious that sellers are still very strong in this market. So we really need to be very, very careful in this market. So whatever buy or position we have in this market, we want to ensure that we move our stop loss accordingly to secure that position, just in case we don't get caught up in any sudden pullback that might happen here. And the only thing that will make the bullish momentum very, very valid here is to see price action break out of the 136.900 level. And then at this point, we know that we are going massively bullish for the later part of the week. But if that is not the case, we are still going to remain doubtful of a bullish momentum here. So whenever we have a buy position around this area, ensure you move your stop loss to secure the current position, just in case price action drops to the downside from this level. So with that being said here, I also want to make things a little bit easy for us during the New York session today, so that we can be able to see these opportunities very, very clearly. So in order to do this, I'll be deleting the bearish trend line. Then I want to be connecting the series of higher lows here. Remember that since yesterday we have been seeing buy pressure resume in this market. So let's bring back our line chart, and then we connect the series of higher lows in this market. And if we do that, we should be having something like this. So we're looking forward to something like this here. We have a higher low here, so I'll be giving this a blue color. Let me give this a blue color like this. So we have a bullish trend line here to guide our trading activity. So in as much as we continue to see higher lows here, price action continues to trade above that bullish trend line, we feel comfortable in our buy position on the USDJPY. So let's continue to see what happens here. Price action remain above this trend line. A breakout of the 136.900 will welcome additional position to our existing trade. And if at any point in time price action breaks down that bullish trend line, then this will be a beautiful sign that we might be having a momentum shift, and continued selling pressure below the structure will definitely welcome a sell position on the USDJPY. So I will be advising you to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So I will be moving on to the last pair for today. I have less than 10 minutes to go. So the last pair we are going to be looking at for today is the XAUUSD, which is the gold metal. So what we have here has been a quite profitable week for us on the XAUUSD. As you can see, we were part of the bullish momentum that started at the breakout of the $1,814.50 level. This actually happened during the New York session on Tuesday, and we saw our price broke out structures like the 1,820 level giving us another opportunity to add more position to our existing trade. Then we saw another breakout of the 1,830 to give us another position to add another trade. And in fact, price moved significantly well and culminated at the 1,845, hereby giving us over 5,000 pips on the XAUUSD so far, as we had multiple entries on this one. Now, I told you something yesterday about this current structure, which I said we were around here during the live session yesterday when we saw price action breakouts of this structure. And I think I shared this on my public platform, where I said because of the selling pressure around the 1,845, if it so happens that price action breaks down the $1,836.50 level, we shall be looking out for selling opportunities. And since the breakdown happened here, price action has dropped to the downside. And if you are part of this position, you would be currently running with about 500 pips in profit. So like I said on my public platform, kindly move your stop loss accordingly to secure this current position. Now that we are heading into the New York session today, you can obviously see that price action has been consolidating here in the last 9 hours. So we have had a situation where price kept on ranging between the 1,836 and the $1,830 level to signal an indecision in this current market. And whenever we have this kind of indecision at this point, you all know what we look out for. We'll remain patient and wait for either a breakout or breakdown of that channel to give us a trading opportunity. So what are we going to be looking forward to this for today? How are we going to use this structure to identify trading opportunity for today? Well, the first thing I want us to do here is to acknowledge the fact that price has been bearish in the last 12 hours now. Price action has been bearish. So if we connect the series of lower highs here, you will see that we have a bearish trend line to further emphasize what has been happening here in the last 12 hours. So price has been trading below that trend line to further emphasize the strength of the sellers at this point. Now, if we take into consideration this bearish trend line, well, you will obviously tend towards a breakdown of the $1,830 level for another selling position in this market. However, if we look at the current consolidation phase here and considering the fact that price is still ranging at this point, we really need to be very, very careful. And one thing that could also happen from this current structure is price action could break out of the trend line, which appeared to have happened a couple of hours ago, but it's not that significant yet. So in order to catch a bullish momentum here, I have positioned myself somewhere right above the 1,835 and the 1,836 level, where I already have buy stops orders sitting above that structure, with the hopes that if price action break out of this level, then we'll definitely be looking out for buying opportunity. And one other thing that further supports this bullish expectation is the continued buy pressure we have been witnessing here in the last 24 hours. As you can see, since the breakout of this level on Wednesday morning, we saw that price action has retested this area. Buy pressure resumes. We saw another buy pressure here during the later part of yesterday's trading session, and we also see buy pressure resume around this area in the last 4-5 hours now. And if this leads to the breakout of the trend line, well, I want to be very patient, so that is why I have my buy stop order right above the 1,835 and the $1,836.50 level in anticipation of a bullish move to the upside. And if this continues in such a way that price breaks out of the 1,845 level, then we should be adding more position to our existing trade. Now, in as much as we look forward to a buy opportunity on the XAUUSD, we cannot ignore the sell momentum that began yesterday. And if the sell momentum will anywhere come close to being valid, we want to see price action break down the 1,830 level to further emphasize the strength of the sellers here. And if this happens, selling pressure below the structure will definitely welcome additional position to our existing trade. Now remember, we have a beautiful structure here at the 1820 level, which I laid emphasis on this at the beginning of the week, which is one of our significant structure on the higher time frame. And for the sake of those who are not part of the our earlier sessions, let's quickly run through the daily time frame so that we can see the importance of the 1820 level. Now if we run through the daily time frame here, the first thing we saw on the daily time frame was the fact that price is back into that structure where it started the year. Let me delete this one and let's see things clearly here. So if we look at how the year started on the XAUUSD, we saw the final breakout of the 1820 and the $1,800 area. This level has been a strong selling niche throughout the month of December, and as soon as this new year started, we saw the breakout retest of the structure, which moved price with about over 14,000 pips to the upside on this one. And since the crash came in here, started in the month of February, we saw our price drop back into where it started the new year. So at this point in time, we agreed at the beginning of the week that we are at a critical point in the market where anything could actually happen. And we all said if price action drops below the 1820, it will be a beautiful opportunity to join a decline to the downside, as this area is a strong selling niche. And I had to compare this with what happened in the month of December. As you can see, selling pressure, selling pressure. Then if we go to as far back as the month of June last year, we saw our selling pressure resumed below the 1820 level, and throughout the second half of last year, price action traded below the 1820 to emphasize the strength of the sellers below that structure. And so if the same thing happens here, price action drops below the 1820, we definitely want to be looking out for more selling opportunities. However, if it continues to trade above the 1820, well, this is a good buying opportunity here. And as you can see, what has been happening since the beginning of this week, we have been lucky enough to be part of this buy position as we join the move all the way to the upside. And right now, price is trading around the 1835 level. So I want to see price action, how it reacts to the structure. And so like I said, on the 1 hour time frame here, I said if the sell momentum continues in such a way that it drops into the 1820, as soon as it tests the 1820, kindly move your stop loss to secure your current position as we wait out and see how price action reacts to the 1820, and this will determine if we are going to be adding more position to our sell position or probably get ready to buy the XAUUSD. So this is what we want to be looking forward to if price action ever comes back into the 1820. We look out for price coming to the structure. If buy pressure resume above this level on our lower time frame, then we buy the XAUUSD. But if that is not the case and the contrary happens, where price breaks down the structure, then selling pressure below the 1820 level will be welcoming additional position to our existing trade. So let's keep this in mind as we scale back down into the 1 hour time frame. So back into the 1 hour time frame, and looking at what we have here, we've been bullish since the beginning of this week, and zooming into the current structure where I said price is currently trading within that channel between the 1835 and the $1830 level. So we are looking forward to buying opportunity above the structure and selling opportunity at the breakdown of the structure. So let's be on standby to catch any of this opportunity. It's quite a simple setup we have here. Breakout of the 1835 triggers a buy position, and the breakdown of the 1830 triggers a sell position on the XAUUSD. So I hope I've made myself clear on the XAUUSD. I can see your comments, Steamroller. I hope I made myself clear. If you do have any questions, feel free to drop in the comments section below. And how it works, Steamroller? So with that being said here, oh, you're welcome, Steamroller. All right, so with that being said here, for the sake of those who are not part of the beginning of the live session, let's quickly do a quick recap of what we talked about today, after which we shall be dropping the curtain for today. I can see your comment, my Gigi. Thanks. Okay, I'm glad it's very clear. All right. So the first pair we talked about today is the US oil, and we already have a buy position triggered as soon as price broke out of the $77.85 level. As you can see here, we had the breakout of that structure. And one thing I stated here is that we want to be waiting and remain patient to see a breakout of the 1,7830. Sorry, I said 1,000. All right, once we see price break out of the $78.30 level, we want to be having a buy position at the breakout retest of that structure. And I also stated that there is still a likelihood that price could drop back into the structure that was broken earlier today, where buy pressure above this level will be welcoming additional position to our existing trade. Sorry, I just had to stop here. This person that is dropping spam messages in the comment section, please be mindful of these messages. Extreme speed is not guaranteeing any of these comments at all. They are spam, malicious, and you could be exposed to being duped from your money. So be careful, please. All right. Okay, so we are looking forward to price dropping below the structure to probably price coming back into this area to incite another wave of bullish momentum. So if price drops, we don't need to be scared. Let's hope that price finds buy pressure above the $77.85 level, then we could join a trend continuation to the upside. And I told you that in as much as we look out for buying opportunity here, we should not ignore selling momentum, the possibilities of selling momentum coming here. And where I said we can be positioning ourselves for selling opportunity is if price drops below the $77.85 level and we start seeing selling pressure below the structure. That is, buyers are finding it difficult to break above the $77.85 level, then we could join that decline to the downside. And I said if you are a cautious trader where you might want to see a further breakdown of the $77.40 level for further confirmation to join a decline to the downside. So these are my views here on the US oil. Then we went on to talk about the US tech for today, where we already have a sell position running after taking advantage of the breakdown retest of the 11,960. And what we saw here, as soon as price broke down that structure to the downside, we had another breakdown of the 11,900 level to the downside. And since price tested the 11,830 level, we have been witnessing some consolidation phase, which is characterized with buy pressure above the 1,830. Excuse me. So I said here that I'll still continue to look out for selling opportunities on the US tech as long as price remain below this bearish trend line. So I said if the buy pressure here resumes in such a way that it climbs to the upside, we don't need to panic, as this might likely be a retracement of that previous impulse leg, as we might be tending to look out for selling opportunities between the 11,900 and the 11,960, a zone which shares a beautiful confluence with that bearish trend line. So this is what we are looking forward to sell the US tech. So if price action ever climbs up, we don't need to be worried about it. Let's wait and see price action evolve into a reversal pattern around this area, then we could join that decline to the downside. Now there is a caveat to this situation here, that is, if price climbs to the upside and leads to the breakout of that trend line, then this might likely turn out to be a momentum shift signal. And what we want to be doing is to remain patient. We want to see further confirmation. So you scale down to your lower time frame, look out for buy pressure above that trend line, then you could then join that rally to the upside. So that is one scenario we are looking for. And the other thing I said here is if price drops below the 1,830 level, selling pressure below the structure will be an opportunity to add more position to our existing trade. So let's be on standby for either of these opportunities so that we can be part of any potential profits in this market. Then I went on to talk about the USDJPY, where we have a buy position running at this point. And I told you that if price action continues to trade above this bullish trend line, we shall remain comfortable in our buy position here. So let's see how this plays out. As long as price remains above the structure, we remain very positive in the bullish perspective. and a further breakout of the 136.900 will be welcoming additional position. Then there is something here I had to call our attention to, and that is the fact that the 136.900 level has been a strong selling niche since the beginning of this week. As you can see, we saw sharp rejection of that structure here, and during the early hours of today, price was unable to even get close to that level. In fact, it was unable to break out of that structure, giving us a clue that sellers are still very strong in this market. So what will make this bullish momentum here very, very valid is if we see price breaks out of that 136.900 level. Then at that point, I will be massively confident that a bullish momentum has come to stay in this particular market. Now that we have said we are looking out for buying opportunity, and we're already in one running right now, I have told you that if we take into consideration the sell pressure we have been noticing here in the last 72 hours, there is a likelihood that sellers could take over this market, and the only way we can position ourselves to catch that move is to see price action break down both that bullish trend line and the 136.550 level, which will definitely be the first time it will be doing so in the last 24 hours. And if that happens, selling pressure continues below the structure in our lower time frame, we will have no choice than to join that decline to the downside. So please, let's keep this in mind as we head into the New York session. Then I went on to close the day with the XAUUSD, which we have been selling lately, and I showed you a consolidation phase that is currently going on right now, which further emphasizes the indecision in this market. And since we don't have any catalyst to drive price movement in the form of any fundamental event, we'll have no choice than to remain patient with this current structure, wait out for either a breakdown of the structure for selling opportunity or a breakout of the 1,835 for buying opportunity. And for those who had sold below the $1,836.50 level, I have told you to move your stop loss to somewhere right at around your entry point to secure your current position, as anything could actually happen. And if this leads to a further breakdown of the 1,830, then we want to be adding more position to our sell trade. And it's on this note we called it a day here on the Extreme Speed. I'm so excited to have been with you guys, and I appreciate your rapt attention, and I hope that we are on the same page on this one, and that we are well equipped so that we can take advantage of any potential trading opportunity during the New York session today. So I wish you guys best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review the financial markets as usual. So for the newbies, you're also welcome. So try to be with us again tomorrow so that you can be part of this, and I assure you with time you get to understand how this works. So do have a wonderful evening, everyone. Bye bye.